Hey traders, Akil Stokes here of Trade Empowered, and welcome to this week's Live Room Weekend Review. In today's episode, instead of giving you some flashbacks, I'm actually going to walk you through a very high probability trade that we took in the live room today. One of those trades where I told the traders today where you just have to take it, and if you don't, you should be ashamed to be a trader. So I'll walk you through what exactly we saw and how it turned out. And then I'm also going to give you a flashback of a syndicate video I put out earlier this week. Now this week's been an interesting week in the market. It's been pretty slow on the day trading side of things. I don't know how many trades we had, but it wasn't a lot. And we've had some pretty dull days. A lot of break-even trades, a lot of patterns that never completed. The syndicate's been alright. We've had some pretty good trades in there between Jason and I. We've been able to shoot out a good amount of trade calls throughout the day, and that goes from basically whenever we're awake. I get up about 6 o'clock in the morning or 5:30 in the morning, and I'm not sure when Jason goes to sleep, but we've been pumping them out. And syndicate members, you've seen the charts that have been in there. But mainly, I think it's been a slow week in the market for two reasons. The first reason is because, well, we've had two big fundamental announcement days this week. We had Wednesday and Thursday. So before that, I think just the market was just kind of just consolidating and moseying along until they really had a clearer view of which direction it wanted to go in, especially looking at the major pairs, looking at the euro dollar, pound dollar, euro yen, pound yen. They all just kind of went sideways or were slowly trending up in a small channel, waiting for Bernanke to say something that, broke it out into one direction or the other. Again, consolidation leads to expansion, and then we get consolidation again, followed by more expansion. Aside from that, it's just been a very hot week here, at least here in the U.S. I think I've been watching the Open Championship. I know it's been hot over there as well. And well, it's just I guess the markets are a depiction of the psychology of the millions and millions of traders trading it. And well, if we're feeling hot and lazy, I'm guessing the markets are going to do the same. I don't know. Don't take that last example into account for anything if you're looking to learn. But anyway, let's talk about the trade we had today. The one that I said that it's a shame if you didn't take and you should be fired and pack up your bags as a trader. It came here on euro yen. And let's bring it up. Euro yen, we're on the 5-minute chart, I believe. And I just entered euro dollar again. You can see the heat's getting to me already. All right, strike two. Euro yen. There we go. And here's what I originally noticed on euro yen. Early this morning, I posted this to the syndicate. I was looking at a Gartley pattern. So I was looking at an X to A right here. You can see we just come and nip that 618. So looking at X to A to B. We then came down for a retracement, giving us a valid C leg. And if I bring my 127 extension in, swing low to swing high, and back down, you can see my 127 extension is going to land right on that 786, giving me a valid Gartley pattern completion right here. Now, I did jump into a little more detail in the live room about this, but this was actually a trade I originally wasn't going to take, and mainly is because I couldn't get a risk reward that met my rule set. When I trade, and one of the reasons I've been so profitable over the last few years is because I'm very strict with my risk reward setup, meaning that if I can't make at least a 1-to-1 going to target one, I don't want to trade the pattern, and it could end up being the perfect pattern in the world. All the stars can align. If I can't get that 1-to-1, I got to let it go, and there's nothing wrong with that. So originally I was going to skip this, and then one of our live room members actually brought this to my attention that we actually had a cipher pattern set up as well, and this is once again why I love this group trading aspect, because I never would have saw that if it wasn't for these traders, and I ended up making some money off of it. But we had an X to A to B. We're looking at a B to C down here, and then we know for cipher pattern completion, we had our CD completion at the same point, that's 786. So as I make this a different color, you'll see that our cipher pattern actually lined up with the same exact point as our Gartley pattern. Now, I do have different rules for where I put my stops on a cipher pattern than what I do with my other advanced patterns. And in this case, the risk reward actually worked in my favor due to that different rule set, and I was able to take this trade. Now, you can see it rolled over, and actually, even before this happened, for you guys that are good, you can probably see this already. We actually had another mini cipher down here that ended up working its way back up to that bigger one. And now this was one I didn't take as well because there just wasn't a lot of profit in there. There was about, if you take conventional targets, there's about 10 pips to target one, which anything under 10 pips I just pass. But you can see three patterns back to back, or three patterns in this one little consolidation period. You know, piggybacking right off of last week's video on the wolf market. And if you didn't watch that, make sure you go back. I've got a lot of good feedback on that. So that was one of my better videos. But you can see couldn't take the original pattern. Had some help from my live room members. Was able to spot a secondary pattern that did meet my rules. On the way to completing that secondary pattern, we hit a smaller advanced pattern down here, rode it up to the cipher pattern, and we didn't hit both targets. But if I bring my Fibonacci retracement in from my swing low to swing high, you can see that we hit target one no problem, making about 18 pips on target one, going 1-for-1 this Friday. So a pretty good trade, and this is one where you have to take it. You know, you have a Gartley pattern, which is powerful enough by itself. You have a cipher pattern, which is even more powerful. When you get both of these at the same level, the same exact level lining up, if you don't take it, and assuming they're both in your trade plan, if you don't take it because you're scared out, you're nervous about it, you're I don't know whatever reason you can make up to not take it, then shame on you. You need help with your trading. So this was a pretty cool setup and a good way to end our live trading week. Now, I'm going to take you back to flash you back to a syndicate video, or a section of a syndicate video that I did on Monday. I got some pretty good feedback from it, and just want to share it with you guys. You can see we shot up, and then we've been consolidating ever since, kind of in a flag type pattern. And what the market's doing right now are basically breaking to the upside to retest this wick. And if I zoom out, and you see I have not a 1-6-18. You see I have a 618 extension sitting right here, basically in the middle of the zone. If I bring that in here and even bring it a little higher near this wick, you can see that we are at a structure level. If we take a look left, we're hitting these highs, a little consolidation in here, a little consolidation around this level. But really what I'm looking for is a potential low risk sell entry here on Euro. Going down to the 60-minute chart, you can see once again we're coming into this previous structure level. We did go overbought before. We do have divergence coming to this level again, meaning we have an equal high, just about an equal high here on price action, but we have an obvious lower high here on the RSI. Boom to boom. What I would look for is a potential double top at this level for a little bit of confirmation. If you're an aggressive trader, you may want to just sell it right now in anticipation that we're going to shoot back down to these lows. But I'd wait for a more conservative entry, look for a double top. So we went overbought again. We're retracing right now. If we come back up to this 31.67 level, we get some more RSI divergence on there. Not a bad opportunity to look for a short. Reason being, we have the 32 even handle, which is a great psychological number that should give us some protection. That's right at the previous highs over here, so we can literally put stops right above these highs. Even if we were to take an ATR based stop, we're looking at, what do we have, ATR of, give me something, ATR of 19. We're looking at the high of our initial peak of our double top at 31.73 plus 19, 83, 93, looking at 92, then plus another 19 is going to be 21. So we can probably have stops. You'll get a 2 ATR stop right around here at 32.20, giving you a potential risk of maybe about this much, and potential reward of either coming back down to this structure level right here, even coming down all the way to retest these lows. So again, not a real high probability trading opportunity, not like a cipher pattern or anything like that, but a potential structure and CTS based trade Let me just see if we have anything else in here. If I were to bring a Fibonacci retracement in, swing high to swing low, right at a 786 as well. How about a Fibonacci inversion from our previous swing low to swing high? We're going to be right at a 127. So we have some Fibonacci confluence. We have a 127 inversion and a 786 retracement. So we have some fibs there as well to go along for our 618. And if we get the double top, then you're going to end up with a pretty good CTS score. There's a few patterns out there that are close to completion. Now, not pound yen, pound dollar. Pound dollar, we got something interesting, and this is longer. I was going to save this for next week because there's nothing I really like to see our patterns really get past this B leg, but we have a potential butterfly pattern here, and not gonna draw the whole thing in for you again, but you can see our X leg starting up here, 5303, X to A to B, which comes to a 786, B to C, which comes down to looks like a 382 or a 50%. For me, it doesn't matter the butterflies, as long as we hit a 382, it's valid. And then a potential CD completion up here. Now, I'm actually gonna bounce out to the 4-hour chart for this. Me personally, I like to take my butterflies at Fibonacci confluence, meaning that I'm looking for a 1618 extension from our A leg down here to our B leg, which comes in right up here at 5472. I'm looking for that to line up with a 127 inversion from our A leg back to our X leg, which comes in at 154.36. There's about a little less than a 40 pip zone right here. Now, if you're using ABCD pattern, your ABCD pattern is going to complete up here as well. That's not the reason I like it. Again, I don't really care for butterflies much, but looking left, we do have some structure back here, and we have a little bit of structure if I actually bounce out to the daily chart, follow that blue line. I got a little bit more data, but you can see we have a little bit of structure knocking into that point. So it's not going to be a butterfly I'm going to take aggressively or anything like that, but I'm going to use this analysis to try and find the next place that this market might look to bounce around. If we get up into this 154.30 something level and we start playing around here, putting in a good price action type of move, maybe a double top or something like that, then this will be the area where I can look for my next shorting opportunity. And got a break and close beneath this value of this double top. I'm looking for, similar to a 2618 type trade, a retest of this structure level. And here's what I actually have. I've been playing around on the 21 range bar charts, and my mastermind members have been teasing me about this. But it goes perfectly with that video I put out yesterday. If you guys follow me on Twitter or Facebook about the seven habits of the wealthy versus the poor. I'll include that link underneath this video, by the way. But right here, we have basically a head and shoulders pattern on Aussie dollar. We have a head right here, boom. We have a left shoulder. We have a right shoulder, and right here in red, make this yellow, boom. We have a neckline. Now, we basically ABCD'd down there, put in a harmonic move. We've shot down, and I should delete this. You can see we shot down. We spiked below this level. Now, what I'm looking for next, just like on the 60-minute chart, is a retest of this structure level. What I did was I drew in a few Fibonacci's, took a smaller one from our B leg or our C leg to our D leg essentially, and you're gonna see that there's a 618 up there at 9207. We're at a 382 right now, but I can also bring in a 50%, and that should put us a little higher into that mark. 50% is gonna put us right at 91.94, and if I take a bigger Fibonacci from our whole entire swing, our A to our D, you can see that my 382 is going to line up right on that 50%. So looking at an area of pretty much here for a potential reversal. And then not to mention, when we get these harmonic moves, it's not just down, meaning we don't just get equal moves down, but we also get equal retracements also. So if I take an equal move of this pullback right here, our B coming into our C leg, and tag that down here, you'll see that's going to bring us up right below that 382 retracement. So no matter what chart you're looking on it, 60-minute, 21 range, a potential structure-based trade here on Aussie. Okay, traders, so I hope you enjoyed that peek inside the syndicate, and I wanted to show you that because, well, just because we have the new desktop software doesn't mean that I'm going to stop pumping out videos. we get a lot of signals or a lot of trade ideas that come through here throughout the week, especially on the lower time frames. But when it comes to major setups on the 60-minute charts, 4-hour charts, and even the daily charts every once in a while, I'm still going to make sure to record a video for that. And also setups that, well, can't be explained through a simple picture. If there's a nice trend continuation setup, a 2618, a combined technical score setup, something similar to the Aussie dollar one I just showed you, I'll make sure to put a video through that walking you through what I'm seeing and how I would attack that market. So if you have questions about the syndicate, just shoot me an email, or maybe I'll put a link underneath this video. But for $20 a month, it's quite a bargain. So come on, get on board. Other than that, I hope you guys have a great weekend. If you're in the middle of this heat wave like I am, try to stay cool. And I will see you next time I put a video out. Until then, plan your trade, trade your plan, and best of luck.